Welcome, everyone, to this episode of InsurTech Talks from Business Reporter. I'm your host, Rob Galbraith, and today we are going to be talking all about payments with three well-known industry experts. I want to welcome the attendees that are following us on Zoom, that are on LinkedIn as well. And I encourage you throughout our presentation to add any questions or comments that you might have into the main chat. Myself and our panelists, I'd love to get to as many of your audience questions as we can today. And you've got us for the next 45 minutes or so. So it's a great time to get all those questions out. Without further ado, I will introduce today's panelists. First, with 25 years in financial services, Angela Abbott brings deep expertise in helping insurance companies streamline complex billing and payment processes. She's the Vice President of Alliances at InvoiceCloud, and she leads strategic partner initiatives that expand the platform's reach across the insurance ecosystem, focusing on seamless integrations, accelerated innovation, and greater value for shared customers. Welcome, Angela.
Thank you.
Glad to have you with us. I'd also like to bring up Gayle Herbkersman. She is an insurance technology executive with more than 25 years of experience driving digital transformation, AI strategy, and SaaS modernization across P&C insurance. Is the head of property and casualty North America at Sapiens International. Gayle leads go-to-market strategy, solution delivery, and AI-enabled innovation for one of the industry's leading insurance software platforms. She's also a recognized thought leader who speaks regularly at industry events and engages with leading analyst firms on the future of insurance technology. Welcome, Gayle.
Thank you, Rob.
And last but not least, we have a fellow Rob Inserillo. He has over 25 years of experience in the insurance industry with a proven history of leading and delivering large-scale, strategic, and business-critical solutions. In his role at LTM, Rob focuses on the combination of domain experience and building partnerships and alliances to deliver best-in-class solutions to clients. Welcome, Rob.
Thank you, Rob. Thank you, everybody. How are you?
I love the common theme. I did not mention this about my own bio, but I also, when I read my bio, have 25 plus years of industry experience. So we've got a collective century of experience among the four of us here today. So for you folks out in the audience, again, really glad to have you with us and would love to have you ask questions and share your thoughts and feedback throughout our discussion today with these industry leaders. So with that, we want to start with a quick news item, actually, that came across my desk yesterday. And as somebody that has spent a lot of time in the past working at carriers on the underwriting side, managing catastrophe risk, I was unfortunately sad but not surprised to see that the national preparedness level for wildfire has already been escalated to a 4. That signals that firefighting resources are under growing demand nationwide. This is from the National Interagency Fire Center. And the noteworthy thing here, I mean, it's hot, it's summer, the propensity for wildfires, certainly, I think most of us would expect to be higher. But for those that aren't aware, the national preparedness level is a five-step system that's used to measure the overall wildfire activity and the availability of firefighting resources. Level 1 is minimal. Level 5 is the highest level of wildfire activity and resource commitment. And the fact that we're already at level 4 is noteworthy because historically, during June, we're at a level 2, and that increases to level 3 during July. So this indicates that the 2026 fire season is already running ahead of normal. So I know for many folks that are in the catastrophe space, we're used to a hurricane season that kind of runs June to November. And unfortunately, it feels like wildfire season is somewhat following that. And I think this is noteworthy, certainly from a property casualty insurance perspective, but maybe less obviously slow from the point that we're going to be talking about today, which is payment. So as you hear that news, Angela, Gayle, and Rob, just Any thoughts on how that's going to impact insurance companies, payments? Obviously, timeliness, I think, and this is in a very can be an emotionally fraught time for folks that are impacted by these types of events.
Well, I'll go ahead and jump in here. I think, one of the things is when you look at payments, a lot of times we think about electronic invoices and collecting the payment from the insured. But what's really most important to the insureds is being able to get reimbursed for their claim. And I think it puts a lot of pressure on companies because manual checks, take a while. And it's not the most effective way, right, of paying your claimants. And insureds today want to get them in a more electronic method. And so the faster you can help someone, especially when it comes to these natural disasters, the more likely they are, to be satisfied, right? That the customer satisfaction goes up, the retention goes up. It's great for the claimant because they're able to take care of what they need to in this disastrous event. But it's also good for the carrier because they've then, really upped their retention of this customer. So very important to have that electronic capability on the claim payment side.
Couldn't agree more. I mean, we've had so many carriers. This is really the making good on the promise of insurance. It's such an important piece. And there's been so many catastrophes over the last few years. It's been very, very topical with the carriers that we serve, whether it's a flood carrier trying to get ahead of the hurricanes that have just been horrible over the last few years, or on the West Coast with the fires, or there's been stuff even in the central part of the United States that's happened, and tornadoes across Oklahoma and things like that. So it's a very top of mind right now for carriers to be thinking about weather events and how to get ahead of it and maximize this modernization effort.
Yeah, I think one thing I would add to that too is from a moment of truth, and that's what these things are, right? That's when we have to what Angela said, right? Keep the insurance companies end of the bargain. But I think the article said this was actually several months ahead of what was normally calendar schedule. So it goes to readiness. It goes to the availability and the opportunity to scale up quickly and react quickly, right? If everything is on an older or manual process and takes more lead time, the ability for carriers to react is going to be really, really impacted. So I think the ability to react quickly makes a huge difference.
Yeah, I couldn't agree more with what each of you have said, and I can speak from personal experience, having been out to catastrophe sites in the past. I've spoken to, done ride-alongs with a catastrophe adjuster, and they usually represent several different insurance companies, and I can tell you that it made a big difference for some customers that said, "I'm going to be a customer for life because I was treated so well, so responsive from my carrier," versus those that felt nickel and dimed or a bit put through the ringer from an adjustment standpoint. And so it very much is that moment in truth. And I'll also share a story that there was a time where we had a CEO at a company that I worked for go out following wildfires in the San Diego area in the late 2000s and realized, what we were kind of asking folks to do to, inventory, how many socks did you have in your drawer and things like that before we would make a payment. And so he pushed kind of top-down leadership for what we described as streamlined settlement, which is if it's very clear your house is burned to the ground, like let's just pay out policy limits. And so it very much changed, I think, the perception of the company, but there's a lot of infrastructure that needs to happen on the back end to make that possible. So we will certainly be talking a little bit about that today. Our topic is your core is modern, your payments aren't. Here's what's costing you. So thank you all for tuning in to that. And I think this is a very undercover topic in my experience. So I'm thrilled to have the panelists with us today to really dive in because I do feel like this has been kind of an undercovered or part of insurance transformation and insurtech that just really hasn't maybe gotten the headlines that it should, in my opinion. So Rob, I'm going to turn to you first, and I'd kind of love for you to maybe set the stage. There's a lot of tentacles around this topic of payments. And so just kind of help our audience, when we talk about pain points, I'm sure each person that's dialed in today probably has their own experiences where they work. But I think through your experience can maybe help highlight what are some of the key points that you've seen in the industry over the years.
Sure. So carriers are going to, and this goes across small, mid, large enterprise, they're going to focus on policy admin, underwriting, claims, binding, quoting, right, all that stuff. But traditionally and far too often, the payments and the transactional process are considered a back office, like a back room operation. And they're lucky just that, right? What happens there, right? So you stay with all these new automated, whether they're portals or self-service or mobile or different technologies. And at the end of the day, you've got this back office process that's either manually or paper heavy, legacy integrations. A couple of things it'll do. It really undercuts your ROI opportunity. Your TCO targets are never going to be achievable, right? Because you're going to be carrying that legacy debt, and it opens up risk to trust. So, I mean, across risk and fraud, regulatory and compliance, it continues to change, right? PCI is, all encompassing, and there's things coming out every day. You miss the opportunity to really transform one of those critical, and I think Angela touched on it, right? The upholding the end of the contract, right? When you actually pay the claimant, right? If you miss that opportunity to deliver excellence and experience, you're missing a transformational opportunity there. So there's so many things that it goes into, operational processes that have to change and adjust, technical debt. We'll talk more, I'm sure, about integration versus complexity versus orchestration. All of that stuff is very different when you're talking about going to legacy back-end systems. So we could dive into any of those, but it definitely has tentacles. So.
Yeah, and Rob, I know in previous conversations we've had, you kind of talked about a day two that never ends, right? When I think about that, we do the initial transformation and then, oh yeah, we'll get to the payment side. So Gayle, I know from your experience at Sapiens with a lot of these, uh, journeys, right? From a transformation standpoint, you've seen a number of them, and kind of picking up from what Rob kind of shared with us, what have you seen from your perspective on a lot of the pain points as it comes to payments?
Yeah, and I think one thing to consider is the pressure today, right, on the market and what's happening in insurance. Everything is about speed. So as we look at underwriting, it's who can get the quote out the fastest to the agent, who can get it to issue faster is who wins the business. So when you think about that, if you've got all this speed up front, but then your payments, your invoicing and all that's lagging behind, it's not really achieving that straight through processing goal. And I think that's where payments on the underwriting side, on the new business side, really is something that's necessary, right? To modernize that, to be sure you're getting it end to end in the process. And then on the claim side, everybody's talking about one-touch claims. Well, impossible to have one-touch claims unless you're able to electronically pay that claimant. And so again, I think you see where this modernization of the payments is really becoming a big focus on being able to achieve what you need to remain competitive in this market today. So I think this is a very, strong capability that everyone needs to start paying attention to if they want to be able to achieve all the speed and customer retention and customer experience that's demanded to remain competitive.
Thanks, Gayle. And you mentioned speed. Angela, I'm going to come to you next, but we've got a question from
I
Sandy
saw that.
Bell in the chat. Yeah, she says, everything is about speed. Oh, she or he, I apologize. Everything's about speed. It feels like a massive trust failure to give our customers a beautiful, seamless digital claims intake experience, only to make them wait 3 weeks for a paper check in the mail. How can I prove to our executive team that this single bottleneck is actively destroying our brand loyalty?
Yeah, and it's funny, Sandy, it's almost like you've read my notes and thoughts of what I'm going to talk about, and probably in the next portion of our session here. But you're absolutely right. I mean, I am seeing, and this is something that, executive teams are going to have to be convinced of, because unhappy policyholders and payers don't complain. They just leave, they churn, right? And so you're not going to hear a lot of noise or complaints. It's too easy in this day and age to make a switch. So, the claims experience to a claimant, even if you give them a beautiful experience up front, they care less about that. What they care about is money in hand, right? And then so then it does become a speed issue, because it's like, and I see this often. People will say, we're going to modernize our claims experience, and they spend a ton of time on making the FNOL process everything it should be and could be, and still never go follow that all the way through and making sure it's a good experience all the way through the payout. And that's where things are getting missed. And that's where you get the dissatisfaction and the churn. So you can call it one, you can call it, six of one, half a dozen of the other. But like, honestly, it kind of is about the speed, but it's weaving that speed together and balancing it with a good experience all the way through the process.
Rob,
That's a good call out. Thank you. And just thanks for interacting as well. Yeah.
I'm sorry, Angela, I didn't realize.
Go ahead, Rob.
I just want to add one thing there. So, reputationally, right? Insurance companies, you can take the premium payment very quickly. You can bind the policy in seconds, right? They'll accept the money, right? We can send in money within, an instant. When it comes time to get that claim, right? Gayle was talking about the straight through processing, right? Now you've got a reputational problem here. So it's about, sure, you'll take my money in a second, but it takes 5 weeks for you to pay my claim. And when you layer on top of it the current economic situation, where more people are living check to check, laying out money for expenses due to a catastrophe, a car accident, a fire, a flood, whatever, becomes that much more of a problem and a burden to carry. So that timing is super critical.
No, I think you guys are all on top of it. I know a theme of the promise, like the loyalty. This is the expectation, and having one part of your customer experience be modernized and be great, only to have a disaster. And particularly, Angela, as you mentioned, like that, the last mile, right, of like getting the check in hand. That's what I ultimately care about. That's my ultimate goal. I think. I know in the past, hearing about people that work, especially in mapping out customer journeys, right? They talk about peak and end. Like, so what was the high of the experience? What was the low of the experience? And then at the very end, like, how did you feel, right? Was it the end part, like that's going to dictate a lot when you reflect back as a customer on, how was that experience overall? And it's going to certainly weigh the most. So Gayle, I know, we've talked a little bit about, from your perspective, that disconnect that you see from Sapiens is like a system of record for the policy, but then if the payment layer isn't modernized, there's kind of some friction there. I'd love for you to kind of expand on that.
Yeah, and I think this is true for all software vendors that are focused on core systems, is that we can't operate in today's world without a really strong ecosystem of partners. You can only do so much well. And I think especially as you look to payments and some of the complexities of payments, it's very important to have a partner where you can directly integrate to them. And I think to Sandy's point, either you're integrating to them from your policy system and your claim system, but somebody that focuses on how to get either collect payments or send payments out. And they have all the PCI, they keep up with the compliance. They're investing on how to make that whole transaction faster, how to make it easier to integrate, how to really make it seamless for the customer. And they're also investing in things like AI, where they can take this even further. So, we see all these great things today, but by 6 months from now, they're going to be that much better. So as a software vendor, of core systems, we really look to have a strong partner like InvoiceCloud, who can have all these capabilities that we can pre-integrate into our system and bring to our customers, because the carriers need this capability. It should be by what I call a specialist And so we feel very strongly that you've got to, understand what you're strong at and then what other capabilities our insurtechs can bring to the ecosystem that will really drive our insurance customers forward in their business. So.
Yeah, I always use a term, and it might be silly, but it always resonates with people, is that 1 + 1 = 3. How can we put things together that make us stronger in the market? I think that's what the carriers are asking for, right? So if we put it together, it becomes something greater and stronger than it would have been individually. And to mirror what Gayle had been saying, insurance carriers they are investing in modernizing their policy admin systems. I mean, we see that happening, but payments is always the last mile of that transformation that just kind of gets discounted. The front end looks modern and the back office, to Sandy's point, is still cutting checks. And that disconnect is very, very visible in the data. So policyholders can bind a policy, manage their account, and even file a claim digitally, but it makes no sense to wait 7 to 10 days for a paper disbursement. So this gap that we're defining isn't a technology gap whatsoever. It's an integration gap. And that's kind of what we've done so well together, with Sapiens. But another thing to add on to that is that some of these legacy payments infrastructure, they're often siloed from the policy admin system, meaning there's manual reconciliations, exception handling is manual, and audit trails are very, very fragmented. So the real cost isn't the paper check, and I might be very unpopular for saying that, but it's really the labor and the error rate that's wrapped around it. So just wanted to call that out.
Yeah,
I'm glad that you did it. Oh, go ahead, Rob.
Yeah, just adding to that, I think, Andrew used the word siloed. I was going to use the term buffered or blind, right? Because as the data shifts into the payment world, if there's a cancellation, if there's a problem with a check print, if there's an exception flow like we talked about, how is that manually processed, adjusted, corrected, and how does it feed back up into the modernized core, right? All of this stuff now becomes API versus batch and scheduling versus timing, even to the point, Gayle, where you talked about STP. Right, you've got this great STP process. You automate your FNOL, you put it through, and because it's a low-risk claim, it gets approved right away, and then it hits the brick wall of legacy payment process, right? So, I mean, these are the things, and this is where the friction comes in, right? You're not completing the promise.
Now, Rob, I'm going to come right back at you because we have a question in the chat from Calvin Stewart, who asks, our technology team keeps telling us that fixing our payments challenge or gap is just a simple API integration or tech swap, but our risk team are terrified of the security gaps. What operational controls are we completely missing if we just plug in a new vendor? And I know you talk specifically about this being more than just a tech swap.
Well, I think it is, right? So if you look at a tech swap from an integration versus collaboration, so and orchestration. So let's just talk about the one thing I always like when we talk about working with InvoiceCloud is the abstraction opportunities that it offers from a risk and compliance perspective. And if your risk world is all freaked out, work with a payment vendor, right, where you can actually layer that out. PCI, all the data motion, data at rest, all the requirements. You have to let them stay with a vendor, including tokenization and all those things. And you don't have to worry about them in the APIs that you build and everything else. Secondarily, though, I think it's important to understand it's not just moving from API to batch, right? It's actually moving into how you integrate that into the processes, how it affects your contact centers, how it rolls up into communication and completing that real time. I don't know if I've answered the question. If not, Calvin, please feel free to throw something else back. But it is a broad topic, but from a risk perspective, putting a team on that offers best-in-class specialization in the risk space is a very strong play.
Well, I think it's also about making sure that the carrier understands that doesn't have to be their responsibility. That's what we're trying to solve with being tightly integrated to the core systems. As a payments provider, we're trying to remove that from your plate. So modernizing payments isn't just swapping paper for ACH. That's not what that means. If a carrier treats it as a pure technology swap, you're going to often, to your point, replicate the same control gaps in the digital format. It's faster, but it's no safer. So the right way, I think, to frame it is, what controls do you need at the point of disbursement to ensure that you're paying the right person, the right amount, to the right account? So it's more about identity verification and not just payment rails. And I think that surprises people sometimes, that we're covering off on that level of verification, not just moving the money, So we all know fraud and insurance disbursement is rising, especially when payees can request changes to banking details without real-time verification. So there has to be, an emphasis on that. And that is something that we do provide with that. We embed verification logic, including bank account validation, identity checks at the point of the payment initiation. So that control framework is traveling with the transaction and not after it. The goal is having a payments layer that enforces the same rigor as the underwriting controls, really, not one that gets bolted on after a fraud event happens.
Yeah, there's three things there, right? Authentication, validation, and then execution. And you have to build that into any, whether it's a statement of work from a build, whether it's your scoping and your plan going forward. But it's definitely the three things that will help you build that control network, as well as addressing all of the risk and security and fraud issues.
Yeah, and I mean, I think it is doing the due diligence on your payment vendor, being sure they're meeting all those security controls. Also the balancing, right, between your front end core system and your payment system, making sure what you sent went out. So I think a lot of it is around processes and just being sure, to me, I would involve my risk team in that due diligence on the payment vendor and the operational processes that are going to surround that whole payment, be it collections coming in or the claims payments going out.
Now, Gail, I'm going to come right back at to you. You touched on this earlier that InvoiceCloud is one of the partners that integrates directly with Sapiens. So maybe you can help the audience. Like you work with a lot of payments vendors, I'm assuming, and installations, right? What you find with the different clients that you work for. But having a pre-certified connector, what does that mean for a carrier that's trying to reduce implementation risk and timeline?
Right. Well, it works, right? So that this core system has integrated and works in production with InvoiceCloud or whatever payment vendor. You can go and talk to other customers about the experience, about how seamless that integration is. I know when we are out demoing our platform, we show that integration, right? So we want people to understand, that it exists, and that it can be utilized and can be very beneficial for them because certainly as a software vendor, we're not on top of all the PCI compliance and everything else that is happening. And we do want to use that expert. But I think that seamless integration means for customers that you can go into your installation and you can just have that working day one. It's not something that has to come after because the whole integration and fortunately for our system, integration to third parties is through configuration, and that configuration can be done immediately. And day one, you can be using these electronic payments, or you can be paying out your claims through electronic methods.
Yeah, so much of the pre-plumbing has already
Is
been
done.
worked out ahead
Exactly.
of time, right? Even
Right.
before you work with the client. Rob, I want to come back to you because I know you've got a lot of experience on where some of these projects slipped, and there's a lot of parties involved usually within organizations. You've got treasury, you've got billing, you've got claims, you've got compliance, and they all kind of have different sequencing rules. So maybe you can just, I'm sure you could probably talk for hours about some of the complexity and situations that you run into, right? But is there a way to maybe briefly just touch on, the things that you should be aware of or think about that kind of add to complexity to the point of kind of what, Sandy and Calvin's questions have touched on?
Sure. So it's so funny how a lot of the answers to what we're doing are kind of touching on the same topics, right? So the first thing is I think carriers routinely, and I won't say all the time, but a lot of them do. And having been at a carrier, I know we did during my time there on certain category things as well. It's not about connectivity, right? It's not always about integration. It's about the orchestration. It's about building that so that it's part of the ecosystem. It's not just a bolt-on that you just, dump stuff over, right? So for example, a lot of times, as Angela talked to, the validation, the authentication, the authorization, all those have to be accounted for as well. And happy path transactions tend to be where everybody focuses, right? But in the payment space, it's often that it's the where things turn left, where they go south, where they fail, where there's an issue that you have to watch for, whether it be reversing a transaction, whether it be checking a ledger entry, whether it be developing the audit artifacts that are going to be required if you have to report on this. All that stuff's going to be important. The other thing is noting that modern claim systems. I mean, I could pay my claim on my phone, or I could, pay my premium on my phone at 1 o'clock in the morning if I wanted to, right? I could do a transaction at 2 o'clock in the morning, but still modern ledgers and banking systems run some of them on a 24/7 clock, and especially the older ones, right? So how do you handle that reconciliation? Some of those things need to be accounted for. And I would say if it was picked up as part of a day two, and how, like we joked around with how many day twos never actually happen. It's actually one of the big red questions on my notes, right? To bring, how many times do we schedule a day two? Leadership changes, focus changes. Day two is like, well, it's working. We'll leave it for now. We'll come back to it. And then you never come back to it. But when you get there, how much technical debt are you addressing, right? How much are you fixing from the past? So I think there's a lot of things when you look at something as an integration versus a fully coordinated orchestration. And I think that's a shortcoming.
I love the
Yeah, a lot of
participation that we're getting from the audience on this. And if I don't know if you guys feel the same, but like I'm a resounding hearing fraud and trust. And those are the things that seem to be, what everybody's talking about and what everyone's asking to hear about. And that's what's top of mind for carriers in the moment. So it's just, I think, again, this is very timely that we're talking about it. And when you think about, and I really appreciate what my other panelists have said about, to support the payments industry and the tightness of the integration to the core systems and how meaningful that is. But another point about just digital disbursements in general, reducing fraud risk, real-time digital disbursements are actually reducing fraud exposure compared to the paper. So that's just another reason to lean into this, digital transformation. Checks are one of the highest risk payment instruments. I mean, they are subject to mail theft, check washing, forgery. So going digital helps to just, from the get-go, remove those types of attack surfaces. Push to card, same day ACH, those give you a very auditable, time-stamped payment trail that check processing is never going to be able to match. So that also comes into play. It is very when you have a claim dispute or some sort of audit. So from the policyholder's perspective, getting a claims payment in hours instead of weeks, that's not a luxury. It's that moment that defines whether they trust you or not. Speed is the experience that they're expecting. So again, not just going digital, but multiple digital disbursement rails, ensuring that you have ACH, push to card, digital wallet. So we can meet the policyholders where they are and their preferences while maintaining that consistent verification and reconciliation controls across every single rail. So another thing that's great about digital, it also means you can embed communications like payment status, notifications. Gayle, you were talking about that too, just the all in all communication effort to get receipts. So that keeps the policyholder informed, and that reduces, again, it comes back to all the things that are benefiting the policyholder and the payer. It's like a flywheel effect that also helps the carrier as well, because now you're going to be reducing all that inbound call volume to your contact center that you're probably getting today. Where is my claim? What has happened? What was the recent thing that happened? So again, just an overall push to digital reduces your fraud risk and keeps the policyholder experience high, which is what you want all things to happen.
I'm glad you mentioned that, Angela, because it's a fraud stat. The check fraud is up 139% since 2020 alone. So just in the last 5 years, it's just amazing. And obviously, in a world where we can take a photo of our check, right, and have it instantly credited to our account and things like that, it's great that we have that kind of technology, but obviously it increases the risk and the need for verification. Angela, I'm going to come back to you because we got some multiple questions now in the chat. So thank you very much for audience members in our last 10 minutes or so. If you haven't asked a question yet and you've got one burning, now is the time to submit it. Shireen Smith asked, I'm struggling to get budget for modern payment rails because leadership thinks checks are, quote, cheap enough. So how do I calculate the real brutal financial return of eliminating manual checks, including postage, manual reconciliation hours, and stop payment fees to finally force a business case. I'm going to guess, Angela, that when you've engaged with prospects and they're kind of thinking about switching
Yeah.
over, you probably had to help them build an ROI or build a business case to make this switch. So maybe you've got some thoughts that would help Shireen.
Yeah, great question, and I'm happy to answer it because I have a good answer for it. Yes, that is the perception that's out there, but in reality, electronic disbursement is always going to be less than a paper check, all in. When you think about labor costs, when you think about print and mail, whether you're either doing that in-house or if you're outsourcing it, and then there's all the other things, right? Not just a producing the check, but I mean, are we saying that the Postal Service is getting it there on time 100% of the time? No. We're seeing so much lost in the mail. We're seeing interception of checks, check fraud that's costing companies. And then what happens? That's the question you have to ask yourself is then what happens? When a check is lost or never got there, you're having to reprint the check. The customer is already angry, so now you're having to overnight. So when I go do a full ROI analysis with my clients and I say, okay, what does that mean to you? And oh yeah, we are. Then we have this FedEx bill that we've for overnighting. And then also the redundancy in now we have to go back and update our system of record that check didn't happen. That's a manual process for most people. So when you think about all the bolt-on things that happen, and I'm happy to run an ROI analysis with anyone who's interested, it almost always, in fact, I've never seen it come back with a negative ROI. It's always very positive. And then we could spend a whole topic on virtual cards, but with virtual cards, there's actually an opportunity for cost sharing, as you may well, some people know this, some people don't, where I've actually made it cost neutral for the digital disbursement. Some can even do revenue share. I don't know if that's something your business is into or not, but that's an option. So not only is it not more expensive, it can be cost neutral or even it can be a revenue center. So it's crazy, but yeah, that's one of the biggest misconceptions that I see.
Just
And
add a
I would
business
think,
that real
go ahead,
quick,
Rob.
right? So right now, premium is not the number one driver for customer retention any longer, right? It's the overall service experience. And with, I think, somewhere north of $170 billion of premium at risk for customers who are willing to shop around, retention is a lot cheaper than acquisition. So when you look at a business case, retaining your customers through customer satisfaction numbers is a much cheaper play, and it builds brand loyalty and word of mouth as well. So overall, I mean, and those are harder numbers to necessarily measure, but they're very, very real in the shopping experience of customers today.
Yeah, I think to Shireen's question, one of the challenges is just again getting your arms right. There's so many different tentacles here. If you are able to kind of capture data right that shows all the different facets that payments touch, and I think hopefully you've gotten out of one of the themes of this conversation. Those costs are going up, right? Whether they be fraud, whether that be decrease in customer loyalty that doesn't have a modern payment system, et cetera, right? But because those benefits, right, of switching can be kind of vast. I think sometimes it's hard to isolate, right, just this one aspect when you are building that ROI. So definitely understand the pain, but hopefully you've got some help and ways to approach that, Shireen. Got another question from Deepak Patel. And Rob, I'm going to come to you. He asks, what is the realistic and immediate path to introducing real-time digital payouts without ripping and replacing our entire existing infrastructure?
It's a broad question, and it's a good one, and it's a challenge that I think freezes a lot of carriers in their tracks, right? That they're afraid to jump into that. But it's really an assessment of where that digital payment process has to fall. Where does it live? Are you talking about cross organizations? It is a single ledger experience, right? I mean, there's a million different things when you look at and assess the infrastructure. But the good news is, through connectivity, through automated reconciliations, bringing AI in, putting the right API structure in place, especially with entrenched older accounting systems that have to stay there for corporate reporting, et cetera. You can bring it in and not rip out everything. You can simply replace what's necessary or augment what you've got. And Angela, I know that you're probably more experienced on the integration side with some of the solutions you put in, or maybe Gayle with these things as well. But to me, it's not a full renovation. It can easily be an upgrade.
Yeah. I mean, and I look at the way we do it. I mean, just at the most simplistic way is just really calling out to the InvoiceCloud screen, right? Where the customer will enter their information. So right there, it's just an API call out. You're not even having to build a screen if you don't want. You can brand it. But that is at the simplest way, right? At the simplest terms of just a basic integration out. And I think that you just have to take it in steps. So if you do that, you do the digital payments, you can just start there. And then as, over time, if you want to make it any fancier or, more branded or whatever, you can do that. But it doesn't have to be a rip and replace. It's
Yeah.
basically a call out to a new screen at the proper time in your process.
Yeah, I think the key is to finding, that your core system has connected with somebody like an invoice cloud to be embedded already. Because again, I'm hearing things that we take for granted that we know, right, on this panel. Like we know that the key to this is having that tight integration and having that end-to-end process so that it's very seamless between the whole payments process is embedded, that the carrier themselves aren't having to build or go and create things that already exist today. I think that's the biggest aha moment I have when we do our demos and we do them together with our core systems, and they see the seamlessness that happens, and that a lot of carriers like, oh wow, I wasn't expecting that you were going to handle that. I wasn't expecting that you were going to handle the auto pay process from end to end. I wasn't expecting that you were going to handle ACH returns. I wasn't expecting that you were driving the paperless and the pay by text. That's all being handled as a part of the integration. And that's a day one functionality on a SaaS platform that's going to continue to evolve and update without you having to spend your resources to keep it. I always say it's one thing to get modern. People think it's a problem to stay modern, but it's not if you are partnered with someone who is a SaaS, platform. So it's going to constantly keep that updated for you. Everybody's on the same version of InvoiceCloud, right? We don't have multiple versions. It's just the most current one. So a lot
And
of
I think that
misconceptions that I take for granted.
I think that abstraction allows the carriers to do what they do best, and for InvoiceCloud to do what it does best, right?
Yes.
You guys handle keeping it up with regulatory PCI, everything that seems to be changing on the hour. Let insurance carriers deliver impactful products that protect their customers, right, and deliver on the claims promise. And I think
And let
that's
the core systems have excellence in policy
correct.
administration and billing, right? So if
Yeah.
everyone plays their role, you end up with a pretty great outcome. So
Right?
So we are almost at time, everyone. I really appreciate all of your wonderful insights, panelists, and for the questions from our audience. I'll kind of go around the horn one last time and see any closing thoughts or remarks that kind of leapt to mind as we've been talking for the past 40 minutes or so. So Gail, I'll go to you first.
Yeah, I mean, I think it's been interesting to see the questions that we've got that a lot of carriers, right, are still struggling with how can I get my management on board to support a digital payment endeavor, right? How can I get this project started? How can I get it into our production systems? But I would say at the most basic, just the recommendation I have is to team up with an invoice cloud, team up with a payment vendor to help you make that business case. Because as Angela pointed out, she's done this hundreds of times, right? And she can help you collect the data that you need, the statistics. I think fraud is a big thing. I think, sometimes it is the physical checks and all of the postage and all that, but also there's these other things that may not be counted in this business case, like fraud and how often these things go wrong. So I think my advice is just to, really team up with an expert, like I said before, and let them help you make this business case. Let them show you how easy it is to integrate into your current infrastructure to take advantage of this, because it is going to be necessary to remain competitive.
Thanks, Gail. Rob, I'll go to you next. Any closing thoughts as we wrap up our discussion today?
Yeah, so a couple of things. What's the old term? I think what got you here won't get you there, right? The world is changing every day. Risk is going up. Compliance and regulatory standards increase domestically as well as globally. Um, Expectations from our customers are going up every day. With that being said, the skills, the talents, and what the insurtechs and the solution and the core system providers like Sapiens and InvoiceCloud bring to the table are also getting better and better. So look for best in class, look for best in breed to combine to deliver solutions. Look for the right domain leadership to help you through your planning and your strategy. Don't miss the opportunity to protect your brand, to protect your organization, as well as deliver substantial customer experience improvements and retain your customers. I would say it's across the board, but best in breed. Let your company do what it's got to do, and let everybody else help you get there.
Terrific. Angela, I'll let you have the last word.
Yeah, and I'll piggyback on what Rob just said about brand trust. It's brand trusted insurance is one of those things that's earned slowly and lost fast. A
Yes.
policyholder who's filing a claim is at their most vulnerable position. They've already had a loss. So what happens next is either going to validate or destroy the relationship. That digital front end and manual back end experience is one of the most damaging patterns I'm seeing in the industry. If you give someone a really cool app to file a claim and then mail them a paper check 3 weeks later, the message they receive is, this company doesn't actually have it together, right? And the moment a policyholder has to call and ask, where's my check, is the moment they're probably shopping someone else. So ultimately, I think the carriers that are winning on retention aren't the ones with the best coverage or the lowest premiums. They're the ones who pay fast, pay accurately, and communicate proactively throughout the process. So payments is a retention strategy. I'll die on that hill.
Well, with that, I want to thank everybody in our audience today for your attention, for your engagement. We got some fantastic questions in the chat, so I really appreciate everybody that took the time to join us today. This has been InsurTech Talks. I'm Rob Galbraith, and we hope to see you next time.